Hello and welcome to this special show on the state of the economy. We are getting the CPI numbers, the consumer price inflation numbers for January, and it's a mind-boggling number. It is 6.5%. Our poll was 6.1, and several economists told us that we could be on the higher side. The 6.5 almost looks like a typo, but that is the number that has come in. And food price inflation could be a very big culprit because it's come in at almost 6%, 5.94. Remember, it was 4.19 or thereabouts in the previous month, that is for the month of December. For the month of December, food was 4.19 and overall inflation was 5.72. This 6.5 is absolutely a mind-boggling number, at least for me. The Reserve Bank just told us on February 8th that the Jan-Feb-March average will be 5.6% compared to, lowered from the earlier 5.9%. So if this is 6.5, it will have to be mightily lower in Feb and March to get the Reserve Bank average for the quarter of 5.6. I didn't want to read out the 6.5 first because I thought it could be a typo, but that is the number. 6.52% is the January inflation number. The food price inflation is almost 5.94% compared to 4.19 in December. The urban and rural inflation numbers come separately, and rural inflation is actually the one that's the culprit at 6.85%. My God. That's why the combined inflation number has come in at 6.5. Urban inflation coming in at 6%. Month on month, the combined food price index appears to have risen by 0.3% and the headline inflation by 0.5%. That's a dangerous rise. If every month inflation rises by 0.5%, you are heading for an over 6% average. So 0.5 is a little high. One would like an inflation at 0.4 or below month on month, and especially in winter months when vegetables are cheaper, we should actually not see such a sharp rise in month-on-month prices. Now we come to the ones that are the real culprits, cereals. Cereals and cereal products index is up 2.6% on the month. Here's where perhaps some economists were expecting that because the PDS food has become free now, under the budget announcement, maybe the calculation will, reduce the cereals prices, but that is prospective. That was announced, perhaps in Jan and therefore, or in Feb, and therefore we are not going to see it applicable in Jan. Whatever the reason, 2.6% rise in cereals in January over December, not YOY. Month on month, that is the increase. Pulses and products have risen about 0.1%, not very serious. My sense is milk would be a very big culprit, but I'm just waiting for those numbers. Housing index is up 0.8% on the month, okay? I'm reading month-on-month numbers. So the overall food beverage index is up 0.5% month-on-month. What is a relief is oils and fats. Edible oils has been consistently falling after that big rise post the Ukraine war. That's down about 0.6% on the month, and likewise vegetable index is also down 3.8% on the month. All told, this is not looking like a very good number at all. Perhaps the Reserve Bank not by any means indicating that they are at the end of their rate hike was prompted by an expectation that the January inflation number is going to be ugly, but nevertheless they reduced their quarterly expectation to 5.6%. So it's not gelling. What did the Reserve Bank? Did the Reserve Bank know something, or it did not know the 6.5% number? If they knew, they would not have reduced the quarterly forecast by 30 bips. This is extremely confusing, at least to me. So let me toss it to our experts. Rupa Rege-Nitsure, the chief economist at L&T Financial Services and one of the original authors of the Urjit Patel Committee report on inflation targeting, is with us. Aditi Nayar, chief economist. ICRA is also with us. Upasana Bharadwaj, senior economist at Kotak Mahindra Bank. And in a bit, we'll be joined by the bond expert, Jayesh Mehta of Bank of America. First, the ladies, welcome. Rupa, 6.5, were you prepared for it?
No, not at all. Actually, if the Ministry of Consumer Affairs data showed sequential easing in the prices of many varieties of pulses, edible oils. Of course, cereals inflation, we were seeing it going up. But 6.5% is beyond my expectation, and it's definitely a very negative news.
Okay, well, let me get everyone's, expectations. It is obviously outside. Even my range was not 6.5, so it's absolutely flabbergasting. What about you, Upasana? Your thoughts? 6.5?
And that's clearly a very negative surprise. I think we were at 6.05, and right now, clearly the culprit is, like you said, food. Cereals is something which we are really shocked about. Of course, we were looking at high-frequency data suggesting that the cereals and the milk prices will be higher. But having said that, we were not expecting such a big rise. Unfortunately, the high-frequency data for the past 10 to 12 days for cereals is also showing consistent increase. And if the magnitude is going to continue, then there is a significant upside to RBI's recent projections which have been revised down. So we'll have to see how this really goes. But as of now, my average for this quarter itself is coming to again 5.8%.
Okay, well, I'm checking again and again because I'm so scared that we have reported wrongly. But no, every news agency under the sun is saying 6.5, and the PIB press release is clearly saying it's not even 6.5, actually it's 6.52, just to make it look a little more gory compared to the number of 5.72 month ago. That's the December inflation, and food CPI, as I read out, coming in at 5.94%. Now let me just check if there are any more bigger culprits to this contributing to this increase. Like I told you, cereals year on year are up. Now let's read the year on year numbers. 16.12% rise in cereal prices. Meat and fish is up 6% year on year. Eggs is up 8.78, and most of us can testify to that, the way in which egg prices have gone up month after month, 8.78, 8.8% almost. And milk products is up 8.79% year on year. What is the month-on-month increase in milk? Because we heard a lot of announcements in milk. The index has gone up from 173.6 to 174.6. So that works out to a little less than 1% in terms of milk. But that is month-on-month, year-on-year. It is an 8.9% increase, 8.8% increase. Oils and fats is the one that's hardly increased, 1.4% year-on-year. Fruit is just 2.93%. Veggies is minus 11.7%. That's the saving grace, really, in terms of food prices. Pulses is up 4% year-on-year. Sugar flat, about 0.9 year-on-year. So overall, food and beverages is up 6.2%, 6.19 to be precise, year-on-year. The other clothing and footwear is up 9%. So now we will get to the core numbers. Miscellaneous, which is the core number, is 6.2%. We will get a more correct calculation of core inflation. Okay, it's come in. It's come in at 6.1%, so that's practically unchanged from January. But this time it's not core, it's core plus food that has become the culprit. Aditi Nayar, you're waiting by. Tell us your reaction.
Thanks, Lata. Clearly, the negative shock has come entirely from food. The other items are by and large in line with what we were expecting. Now, in terms of the average for the quarter, we anyways expected Q4 to be very flattish as compared to Q3. So we were puzzled why the RBI, the MPC had reduced their calculation for the current quarter. And now we'll have to rework whether February or March are going to be in line with what we're seeing for January, or how much of a downtake we can expect from here on out, because in any case, a lot of the seasonal factors that take the food index down or the food inflation down would ease out from February onwards. So we cannot expect that to be too much of a benefit from lower vegetable prices, for example, going forward. So I suspect we're going to have an average reading for Q4, which is going to be at least 6%, if not a little higher than that. So that, as you said, is a little bit puzzling in terms of the reduction that the MPC had made in their estimates for Q4. But we'll also have to work out the trajectory subsequently, because we were expecting there to be a sharp easing in the inflation numbers in Q1 of next year. So how much does the trajectory going out get affected by this unexpectedly high food inflation number is something that we'll still have to work out, because that's going to then hold the key. And I suppose the next sprint is really going to hold the key as to what the MPC is likely to do in the April meeting.
Okay. Well, let me look for reasons or some excuses whether the number can come down. Rupa, you know, the food under the Food Security Act, that is the PDS food, is now becoming free. Will that work into the calculation starting February, and can we hope to see this 6.5 falling off a cliff?
Well, I personally feel that, more than that, if you see, again, we are back to this MSP-induced spikes in inflation, because for most of the Rabi crops also, the MSPs were set at a relatively higher level. And we track this mandi price data quite closely. And for majority of the Kharif crops, where now the marketing season is going on, we are seeing they are consistently ruling above the minimum support prices. And going ahead, I have been reading reports that except for, mustard and a few oilseeds, for rest of the Rabi crops, again, they are expecting mandi prices to be significantly higher than MSPs. So these are tailwinds for farmers, but it's going to create challenge for Reserve Bank of India.
Oh, indeed it is. We must get some perspective of what we are talking in terms of an increase. The food inflation is up 5.9%, 5.92, isn't it? Over a 5.5% last January, which means year on year we are rising by 5.5%. That's definitely going to pinch. Core inflation is up 6%, over a 6% last year, and likewise headline inflation up 6.5% over last January's 6%. So, it is not as if it is a low base, and that's why the number is looking higher. The previous year, Jan, also was 6%. So this looks a bit structural, explains perhaps the Reserve Bank's hesitation to give any guidance that rate hikes have peaked off. Okay, now to the man who will tell us the cost of capital. Jayesh Mehta, welcome to the show. Tell us, how will the market react tomorrow?
So it is spoof, right? Like market will be, as like all of you, everybody is surprised. So of course we will see at least 3-4 basis point going higher, maybe not more, because I think the larger event is also tomorrow is the US CPI inflation, right? So that's something market's gonna wait and watch for. But this is definitely already, the yields were higher. It was at 736, maybe another 3-4 basis point can easily go. But as you said rightly, they reduced their forecast, but I think RBI also did mention somewhere in governor's speech, right, that last time, November, December, the inflation was lower because of food prices. And that's why we were all wondering after the policy why they were so cautious and stuff like that. So maybe they had a reason that food inflation can bounce back and, spoil the projection. But then they're reducing that Q4 projection. That is really, really spoofing. So we don't know. We need to actually figure it out, find out more deeper. But at least, the first reaction tomorrow will be higher. Maybe it may open up 5 basis point higher, 3 basis point higher. We don't know. But it will definitely be around 3 to 5 basis point higher than today.
Before we started the show, I told my producer, this is going to be an also-ran kind of show. I will probably wind it up earlier because, it's going to be 6% or a little less than 6%. The RBI has just finished a policy. There isn't much to discuss. This has completely thrown a cat among the pigeons, as it were. This is serious. Upasana, now will people start factoring in more than just one more rate hike?
Lata, clearly, I think this projection, one thing is there, of course, we'll have to look a little deeper into each of these categories once we have the entire data set in front of us, and to see how much of this increase that we are seeing for this month is going to sustain into the next few months. But clearly, this does pose significant upside risk, and hence, we will have to relook at our rate trajectory that we were calling for until now. we will have to definitely give a relook. But I think, one more thing is there that we have been seeing some measures by the government, for example, offloading of about 3 million tons of wheat into the market to try and cool off prices under OMSS scheme, etc. So I think we'll have to figure this out as to how particularly a high-weighted cereal category is going to pan out going ahead. That will be very vital in determining the magnitude of the upside that we'll have to determine going ahead into the next 3-4 months.
I take your point. I think I'm going overboard and expecting 2 rate hikes. Perhaps those who were sitting on the wall in terms of whether the Reserve Bank will give 1 more rate hike will perhaps get convinced that yes, that 1 more will come. But speaking of 2, taking it to 7, I think is perhaps I'm going overboard on that. Would you agree, Rupa?
Yes, absolutely. But to come back to your question on reasons, just I thought about our, the former Deputy Governor Subir Gokarn's concept of protein inflation. I think this is the data which you read out, we have seen prices of very high YOY inflation rates in many varieties of pulses, meat, eggs, milk products. So I think this is a resurgence of protein inflation. And we have been seeing that India's consumption recovery is quite uneven and tilted towards high spectrum income groups. So maybe this is indicative of that. I mean, going by, of course, as Upasana said, I would like to get into the details of various categories. But prima facie, I'm seeing some kind of a return of protein inflation. And, earlier Reserve Bank we all were thinking actually that for the last quarter of the current year, inflation is moving towards 5.5% handle. But now it is again gone back to 6% handle. Definitely, we cannot be very optimistic about RBI's future actions. And that's why they have retained that flexibility, and nobody can rule out that there could be another rate hike also.
I'm glad you reminded me of this protein inflation argument of Dr. Gokarn. Many other central bankers also in the 2009-2010 period used to speak of protein inflation. Now, I can't understand for the life of me why every 10 years there should be an epidemic of eating more proteins. It can't be that. There must be more money circulating in the system and chasing fewer goods. And that's why it's an aggregate demand issue, isn't it? Can't you have that interpretation, Rupa?
No, it is very uneven. See, if you look at the aggregate monetary demand, we have been seeing that, within passenger car segment, the demand is more for high-end cars. Between cars and two-wheelers, it is for cars, but not for two-wheelers. Within two-wheelers, it is for scooters and not for mopeds. And so everywhere you see, even FMCG companies, they are still seeing the rural demand momentum is quite weak.
Fair point.
So point is that if you go by imports of consumption goods or the consumption patterns of different income groups, clearly consumption demand is tilted towards high spectrum income groups.
I take your point entirely.
FMCG
FMCG companies have been complaining that the lower end of the goods are not being demanded, only premium products are being demanded. Aditi, Upasana, what is your expectation in terms of what the Reserve Bank may do? Do you think the market will now factor in a definite rate hike in the next policy?
I would like to believe that, Lata. Honestly, we were for a pause till now. But now, given this kind of a shocker, we would like to believe that there is a 25 basis which markets will now be convinced of in April. I think it was a divided forum till now. But yes, they would be fully pricing that in. Also, I think there was a little bit of divide between the stance change for April. There also, the stance change would shift further because clearly the neutral zone is not there with these kind of inflation levels.
More accommodation needs to be withdrawn. Aditi?
Right.
So, Lata, I'll just go back to the point on the PDS. Our understanding is that the amount of food that was being supplied under the PDS, under the National Food Security Act at a subsidized rate, has already been made free from January onward. But the additional allocation which was there of free food grain has been withdrawn. So I'm not sure if that withdrawal of the additional free food grain is what has caused this jump in the cereal inflation. That's something we'll have to figure out from the internals. Other than that, we were also for a pause, even though the MPC had clearly kept the window open for further reaction. We believed that a pause was warranted after having seen the policy last week. But clearly now the next inflation print is going to be crucial in determining what the MPC does after that. So if there is any kind of a reversal in this spike, then maybe we shouldn't lose hope of a pause. But as of now, a pause doesn't seem very likely given this shock that we've seen today.
Fair point. So that's two people saying expect a rate hike. Rupa, rate hike in April itself?
Oh yeah, definitely. Because I think that RBI must have, had some kind of a clue about today's data print, and that's why you see the undertone of the last policy review was very hawkish. And I personally feel they retained that flexibility because they must have sensed this. So another rate hike, and as Upasana said, the postponement of the change in the stance. Both these things I support.
Okay. And, when I was getting comments from economists to prepare for this poll, there were people who said that, I'm going with 6.1, but there is a downward bias because the Reserve Bank has pulled down their average for the quarter, so they know something we don't know. And therefore, anyway, I'm sticking with 6.1 and I will change my future forecast when I see the numbers. I'm sure all of you are going to change, but change to make it higher. Jayesh, would other yields start rising? You said that Government of India GOI 10-year will perhaps rise from 7.36 where it closed to maybe a little more. There is another auction on Friday of the new 10-year. So what about other corporate bonds and T-bills? Do you see a rise in non-government, in non-sovereign paper, which will be sharper?
So, as I said, this definitely, as most of the panelists said, that rate expectation will be built in. Of course, this will also depend on what happens on US tomorrow, which also doesn't look like we're going to be more educated than what we are today, even after seeing tomorrow's print. In that expectation, then if we are expecting one more hike in April, which market was not, right? So then the entire OIS curve could change, yield expectation could change. So that's one different part altogether. Of course, corporate bond prices will move up, and then every borrowing will move up. This is a benchmark, 10 years. If that moves up by 3 to 5 basis points, everything else moves up by at least 10 basis points, right? And there is, we are starting with a new financial year in a couple of months. So that will definitely spike up more than the...
Okay. So not looking good. Just one word, Rupa, you think it's already time to revise next year's 5.3 average CPI, or you will wait?
No, I will wait because, unless the Rabi harvest starts coming to the market, making any prediction before that will not have much credence. So I will certainly wait.
Okay. 5.3 next year. Upasana, your thoughts?
Again, Lata, I'd like to wait a little. We were at 5.2% for the full year. 10 basis here and there, I don't know. But otherwise, we'll have to wait a little before we can really say anything.
Aditi, you too?
Yeah, Lata, we were at 6.6% for this year and 5.2% for next year. So we'll also wait for at least the next two prints before taking.
Now, at 6.6, you are better off than the Reserve Bank. They are at 6.5 and they probably will have to revise if the trend continues to be as bad. Rupa, Aditi, Upasana and Jayesh, thank you very much for joining in and putting some perspective into what is a very shocking CPI number for the month of January. Just to wrap up, the consumer price inflation was expected by our poll to come in at 6.1%. There were other polls in the market which said 6%, but the actual number has come in at 6.52%. The biggest culprit being food. At 4.19 in December, food inflation is now at 5.91. So it's a sharp increase in food inflation, largely led by cereals. Month-on-month, cereals have gone up by over 2.5% and by a solid 16% year-on-year. So, cereals has the highest weight in the CPI index and obviously is the most important product consumed across the country. It's troubling and it may mean that the Reserve Bank will wait a little longer before it pauses. bond markets are definitely going to react with higher yields tomorrow. We wrap up our special coverage. There's more news and updates lined up for you.